energy. So with that, I wanted to ask you about your first book on the shale gas revolution. And then what we can do is we can dovetail into one of your more recent articles that I think a lot of people read about renewables and the rise of renewables. And then would love to kind of finish the last portion of the talk talking about superpower and Michael Skelly's effort to bring large-scale wind to the Midwest through transmission. So with that, I'll just go ahead and kick it off and love to have you tell us a little bit about your first book about the shale gas revolution.
Yeah, sure. So I always preface when I start talking about my first book by saying that I was very fortunate to be in the right place as a reporter at the right time. So when I joined the Wall Street Journal in 2001, 2001, a couple of years later in 2003, I transitioned over, excuse me, to being on the energy team. And as the low person on the totem pole on the energy team, they assigned me the companies in the beat that nobody wanted, and that was domestic oil and gas production. Because back in 2003, there was nothing going on in domestic oil and gas production. You know, just no, outside of Alaska and Gulf of Mexico, it just was, no one was paying any attention to it. So I started reporting and, finding these companies that were out there. Devon was probably the largest of the companies. Chesapeake at the time, no one had ever heard of. There was this sort of wild man up in Oklahoma City that people were talking about. I remember taking my first tour of the Barnett Shale in summer of 2003 to learn about, and all these companies were talking about this new form of well completion that they were working on, and it was very exciting and everyone should pay attention, and they were about to be worth lots of money. And of course, as a reporter, I was very suspicious of this. But as it turned out, they were right. There was a lot of gas, and then later they discovered oil as well, left in the United States. And with the rocket fuel of Wall Street debt and equity, they were able to get it out. And so I spent about 5 years or so reporting on these companies, watching them grow, there was a period where every 3-4 months there would be an announcement like, we found a new shale play, and then decided to write a book about it because I just thought it was such a remarkable thing that was going on, and so misunderstood, because at the time you had people like Josh Fox and the what was it called, Gasland, and the faucets that were on fire, and I thought to myself, we're really, people are approaching that either with unquestioning how great it is, or they're saying how horrible this is, and we're sort of going to create love canals all across Pennsylvania. There is a middle ground. The lived experience was the middle ground, and so I decided to write about that. And fortunately, I wrote about it when I did, because if I came out with it this year, it might not have been so successful.
Right. Well, I know we're getting more folks who are joining, so I appreciate everybody muting their line. We're here talking to Russell Gold. Russell, can you tell us about where the shale gas revolution is now? These are tough times with low barrel price of oil. We're ostensibly in a little bit of a oil war, price war across the world right now.
No, there's nothing ostensible about it. I mean, this is really, it's going to get nasty out there. I would argue that shale and shale producers and their Wall Street backers, enablers, were too successful. They found first too much gas, which depressed prices. I mean, there was a time when natural gas pretty regularly in the winters cost $6 or $7, sometimes even spiking up to $10. I know that sounds a little preposterous these days, but it was within recent memory. But they found too much gas. And they found so much gas that they depressed prices and turned the United States into an export. And then, back in the 2004, 5, 6, 7, 8 timeframe, the conventional wisdom was that the network of cracks that you created with fracturing were so small that maybe you could get a natural gas molecule out, but there's no way you'd be able to get enough of these complex hydrocarbon chains, oil chains out to ever have a successful oil well. Well, obviously that turned out to not be true. And went out and, doubled and then doubled again the amount of U.S. oil production. And I would say arguably they were too successful there as well. And they became such a successful, the Permian Basin, the Bakken, and other places, the Scoop and Stack plays became so successful at producing oil that the United States went from being an importer to an exporter. What's happening right now, literally in the last month, is that Saudi Arabia and Russia have gotten together and said, you know what, we're tired of the United States is grabbing more and more market share. It's time for us to sort of push back. And that's why we sort of find ourselves in the situation. But all of this comes from the fact that fracking has been a remarkably successful tool to get energy from rocks that were previously thought to be inaccessible. So they did very, very well. Now, there's another side to the story, which is the fact that Wall Street absolutely fell in love with these guys. They were providing returns at a time when, after the Great Recession, especially, there were very few other places to go and get good returns. So Wall Street flooded them with debt, flooded them with equity. People kept saying, they're not cash flow positive. These are not profitable companies. And Wall Street kept going. And then right at the end of last year, let's say middle of last year, the great silver chalice of fracking began to look more and more tarnished. Questions came up about how rosy some of the projections were. The parent-child well problem became something that was whispered at first in engineering publications to something that was being regularly talked about by Wall Street analysts. And it's interesting, even before the coronavirus, if you look at some of the numbers, not so much in the Permian, but some of the secondary shale plays, the Bakken, the Scoop and Stack, the numbers are starting to go down right about October, November, December of last year. So there was already a reckoning, let's say, in the shale plays that was already taking place. And then what happened was demand just disappeared and oil prices cratered. And that's really going to cause a very big reckoning. I fully expect many bankruptcies and much consolidation. The shale industry will survive. It will not look like what it looked like in January of this year.
In recent weeks, you've written about the value that renewable energy projects hold for investors. Was wondering if we could sort of shift the conversation to that. But before we do that, I've also heard you write that natural gas and renewables are not necessarily replaceable products. That they are different markets. They're different products for different markets. And are they competitors in your mind?
Years ago, I once described them as frenemies, which I think is probably still the case. Mm-hmm. Hey, look, they are very much competitors. If you look at renewables, wind and solar and natural gas, those power generation sources in the United States and to a lesser extent elsewhere, that's all we're building right now. And they're grabbing market share, and we're closing down coal plants and we're closing down some nukes. So they certainly compete there. However, I have made the case, and I actually very strongly believe this, that as you add more renewables, well, I'll say two things. The first is less controversial, and the second, the less controversial portion is that as you add more renewables, the rest of your system needs to be much more nimble and much more agile. Natural gas clearly provides that. So they can work together very well. The other portion, the second thing that I've argued, which has turned out to be more controversial, I think, is that the fact that we had such low prices of natural gas, which depressed electricity prices for years, enabled renewables to grow quickly. Because there was a point, right now, I think we all know renewables are the low-cost source of electrical generation, pretty much most places in the United States, not everywhere, but a lot of places. But there was a point when that wasn't true. And as you added more renewables onto your system, you were actually raising your overall price. Nobody really paid much attention to that because at the same time that was happening, we had year after year after year of sub $4 natural gas, which was depressing electricity prices. So you know, the renewable energy industry doesn't love to hear this, but I think there's a really strong case to be made that fracking enabled the growth in the United States of renewables on the grid and made it so that utility commissions were not feeling pressured by consumers and consumer activist groups to limit the growth of renewables. By the time, well, natural gas prices haven't gone up, now the situation's changed because, you know, if wind is cheap and solar's cheap and they're cheaper than gas and certainly cheaper than coal these days.
You know, one of the things I think we're all developing different power plants. We mostly see a lot of renewables hitting the grid and a lot of natural gas. Mm-hmm. I can't remember the last coal plant that I heard was being announced in the United States.
Vaguely remember one a couple years ago, but I'm not sure it was even built.
Yeah, and a lot of companies are committing to zero carbon futures by 2030 and 2050. What do you think happens to coal in the long run? Is it something that continues to exist in certain key areas, or?
Certainly the metallurgic portion of coal continues to exist. We still need coal to make steel. But for power generation, no, it's hard for me to see it continuing to exist. Coal generators are not particularly useful in the power grid that we're creating, which needs to be much more able to respond quickly to changes of generation and consumption. Also, coal, Wall Street has just given up on coal. It's very difficult and expensive to get financing, to get any debt, to get insurance, to simply get, someone was telling me this the other day, to get directors, what's it called, the director and executive insurance is expensive for coal. Nobody really wants to do business with them. It's hard for me to see how they continue. If you have a mine mouth coal plant and there's a political interest in the jobs and not erasing the jobs, yeah, some coal plants will stick around. But I mean, even today, I was reading the Energy Information Administration short-term economic output, and they were talking about another 20% decline in coal power generation on the grid. To me, I think we're heading towards where the UK is right now, where they have whole days where they go by without coal on their grid.
Yeah, so for folks who have joined us, if you have a question, feel free to go ahead and type a question in the chat box. I guess in the alternative, you could raise your hand and I can call on you. And we'll figure out how to, I think everybody is muting themselves, but if not, then Jeff can unmute you. Russell, your article most recently, I thought, caught everybody's attention. It was March 31st, and title is "Wind and Solar Farms Are Seen as a Financial Safe Haven in Coronavirus Storm." So I think a lot of our companies are still trying to wrap our heads around the full impact of coronavirus on construction, on operations. But where are you coming from? Because I could tell you, for every article I see like yours, I could hold up 3 that say there's a problem coming.
Well, yeah, I took a little bit of a contrarian point of view there. And first of all, I should say, and I say this in the article, there are certainly headwinds that the renewable energy industry is going to face. Will you be able to get a labor force together to get out on and build a solar farm or a wind turbine? Supply chain doesn't look like it's going to be a long-term problem. I mean, there are certainly some glitches, but China's up and running again, and most of the supply chain looks like it's going to be in relatively good shape. Tax equity is obviously a concern. I personally, from what I was told in the reporting, that I think those concerns were a little overblown, but there are some headwinds. The point I was trying to make is that as a Wall Street Journal reporter, you're always sort of trying to figure out this giant slosh of global capital as it goes around chasing different projects. And renewable energy projects were, even before the virus, very attractive. There's a new group of infrastructure investors that's grown up, that's looking for the kind of long-term 10, 15-year return that these infrastructure projects can deliver. And there already was, frankly, more demand for those projects than there was supply, out globally speaking. Any number of pension funds were interested. And then all of a sudden, we've got the coronavirus. And what happens with the coronavirus? Well, the oil markets, the energy markets go haywire. Nobody's sure where they're heading right now. Interest rates go to zero, and realistically, with inflation, effectively sub-zero. I mean, if you're parking money, in a zero account, you're losing money year after year. So there are the interest for a solar farm that can deliver a 6, 7, 8% return. That's a real asset. So you don't have to worry, if it goes away, there's still actually an asset up there. Oh, and by the way, typically it's contracted for 10 or 12 years with a AAA or very highly rated counterparty, whether it's a utility or a corporation. That's incredibly attractive right now. And as this global slosh of capital is going around looking for something to invest in, they're finding, infrastructure funds are just looking for projects like this. So the point I was trying to make is that if you can get a project through, if you can piece together with tax equity a good wind and solar project, you will be able to offload it and get your capital back. And that pull from investors is going to be very strong going forward. I suspect it's going to keep renewables growing. Maybe not year over year growth, but I don't expect a collapse of interest in renewables. And I'm sort of stunned also by, and I put a couple of these in my story, the fact that there's still RFPs, the fact that there's still deals being signed. 547 out of Quantum Partners just signed a deal in Greece for 150 megawatts a couple of days ago. These deals are still going forward. We've just been through a massive collapse of the markets, great volatility, great uncertainty. You're not supposed to still be signing big deals. So the fact that these deals are still being signed, to me, is a very strong validation of my thesis that renewables are going to be an attractive place to put your money right now, and even more attractive as interest rates will probably stay very low for a while until the economy gets its feet back underneath it. Great. I think you muted yourself.
Great,
there you
thanks.
Go.
So if anybody has any questions, feel free to go ahead and put them in the chat bar, and or you can raise your hand, and between Jeff and I will try and call on you in our Zoom video here. So Russell, you recently wrote a book about Michael Skelly's effort to build high voltage transmission across the Midwest, and for specifically for renewable energy development. I met Michael Skelly probably 12 years ago, when I was, maybe 13 years ago, when I was just entering the industry, and a really fascinating guy. I know you spent a lot of time with him, but was wondering if you could just tell us a little bit about that story. How did you come across wanting to dive into something that everybody on this Zoom call pretty much spends our entire career working on?
There's a really simple answer to that. I wrote a book about natural gas and fracking, which were clear to me was going to be hugely impactful. And then after that, I was looking around and sort of saying, what else is going to be equally impactful? What else is happening in the energy world that's that important? And the answer was very clearly, to me, renewables. They were growing and becoming a bigger and bigger part of the energy mix. And I wanted to tell a story of how renewables went from being this sort of curiosity, this thing that, maybe some people built up in the mountain passes in California, didn't really make much money, didn't really work very well, but, wanted to save the world, so let's do it. How it went from that to being something that was an enormous contributor to the global energy picture in the span of 20 years. I mean, really, in the blink of an eye, in a way. And so I was looking around, and I wanted to, on a personal level, I wanted to write about a book that had to do with climate, and all the books I saw out there that had to do with climate were just terribly depressing. I mean, I'm a huge fan of Elizabeth Kolbert's The Sixth Extinction, But let's face it, it is a very depressing, very bleak book. And I wanted to write about something that I had encountered, which were these developers, people who were out there trying to make a difference, trying to make some money, obviously, saw potential, but we're also out there doing something that would impact the world, and to to sort of mix the current flattening the curve that would bend the constantly upward growth of greenhouse gases in our atmosphere. And I was looking around and trying to find the right vehicle to tell the story, because I was approaching this very much as a storyteller. And when I encountered Michael Skelly, a couple people told me I need to go meet him. So two things became very obvious to me at the same time. The first, he's a very enjoyable person to spend time with. And I was really hoping that if I enjoyed spending time with him, that would come through in the book. The second, his career as an energy developer, which really begins in '99, was the exact time frame I wanted to talk about. And then the third, sort of as this added bonus, the project he was working on, this HVDC line, it was going to enable 3 gigawatts of wind, and it was going to be this backbone, and it was going to, it was just thinking big. It was a big, bold idea that really had, to me, was important, was something the United States should really think about doing. And so I all of that came together in the Skelly story. And so I started working on it in 2016 or so. And at that time, he had just gotten, or was about to get, the federal permission, the federal partnership to build the Plains and Eastern. And I thought, well, God, if he's gotten the federal partnership, he's going to be able to pull this off. This is it. He's cleared the if not the final hurdle, the highest hurdle. And so I set off to write a story that was going to have this great kind of epic struggle with a happy ending at the end, as they put up the first string up the first piece of steel in Oklahoma. Obviously, as most people here on the call know, that's not exactly what happened. It made for a more interesting book, though.
Yeah, what do you think? What do you think needed to have happened for Cleanline to have been successful?
I think what would have been most important was for the federal government to have been actively, enthusiastically a supporter of this project. The federal government was on paper in favor of this project, approved of it, wanted to partner with it, but was not enthusiastic, was not willing to put any of its political capital behind it. Basically said, we'll give you the rights under the Energy Policy Act to go do this, but please don't use eminent domain. And they were very tepid. And for a long time before Dr. Ernest Moniz came in, there was no champion. And and Moniz, when he came in, he championed it, but it was a very politically cautious support for it. This is a big, if we're going to build any sort of high voltage DC backbone in this country, there needs to be an enthusiastic, strong federal government support for this, much more so than what Cleanline received.
So you mentioned eminent domain, federal eminent domain, perhaps. Maybe backstop financing. What else?
The backstop, well, certainly I don't think backstop financing, no. Backstop permitting was required. The other thing I would say is that the federal government needs to look at states like Washington, which have a structure that you go and you get an environmental permit, and that there's a very specific, I forget exactly what they call it, but there's like a council where you can appeal this to, and you get a firm yes or no, and it's in a specific point of time. I think the federal government needs to look at that. This sense that you can go in and work on a project and it could take 10 years to get a definitive yes or no answer is ridiculous. I'm not saying we should rush things through and rubber stamp everything, but there needs to be a certainty of time. If I'm working on a big project, I should be able to know within 3 years, 4 years, whether I'm going to be able to do that project or not. Yeah. 10 years is just, it's it's dysfunctional.
Yeah, no, I completely agree with that. I think there were some of us in the industry. I was working on transmission projects during this time period as well. And we were hopeful that the Department of Energy would help, and they stood up a rapid response transmission team to try and align timelines and hopefully get certainty for investors. And I think it fell short on a number of levels, but we'll keep trying. There's talk of an infrastructure bill right now. Do you think transmission fits into an infrastructure bill?
Oh, absolutely. I don't think the president agrees with me. He said recently that he wasn't going to do any of the Green New Deal stuff or anything fun like that. But I think certainly it fits into what we'd look for in an infrastructure bill. Does it generate jobs? Is it a good long-term, multi-decade investment? Are there long-term benefits? And I think by all of those metrics, bridges, roads, transmission sort of fits that mold. I was reading McKinsey's Global Institute had a paper this morning. I think it came out yesterday or today, that was looking at climate change in the era of the pandemic. And my God, did they sound like a bunch of Green New Dealers? I mean, they were talking about infrastructure spending and transmission spending during low interest rates, and that this would create jobs. And I was thinking to myself, if the Green New Deal and McKinsey can find common cause, maybe this is something we really need to take a serious look at.
Yeah. Of course, I think a lot of us on this call would see, I think for some of us that are planning renewables projects, we see transmission being a big constraint in several years from now, if not now. So hopefully there'll be something that gets done to help us get more renewables on the grid. And
well, Skelly's thesis recently, and I would say in the last 2 years, I've heard him say this a few times, is that what ultimately will happen is that the renewable energy industry will overbuild relative to transmission and become its own, sort of create its own problem, and therefore be forced to generate its own solutions, whether that's through lobbying or, somehow getting FERC to do extra points on transmission. Just they're going to create this, they're going to overbuild to the point where they're not going to get returns unless they can build more transmission. So then they'll put lots of focus on transmission. We'll see. I mean, I'm not sure he's right, but I certainly wouldn't bet against him either.
Yeah. What's something that you learned about Michael Skelly that you were surprised about in your research for the book?
One thing which I didn't put into the book was that he gave one of his kidneys to his sister, which was kind of stunning. And the reason I didn't put it into the book was that I worried that I was sort of, if I did, I'd put him up as too much of a saint, not just is he trying to solve all our problems, but he's giving out kidneys now. I think that was something, but in terms of what surprised me, I think I would say that one of the lessons I took away, and I've said this to Skelly, so I'm not talking behind his back, but you need to be a little bit of in the energy development world, you need to be a little bit of a son of a bitch. You need to be willing to sharpen your elbows sometimes and just get stuff done. And Skelly, one of his big faults was that he's a very nice person. And sometimes I wondered whether, if he just had maybe he needed to hire somebody who was his designated son of a bitch who can go in and get stuff done sometimes.
Great. Okay, we've got a couple of questions that have come in. The first one is, and we talked a little bit about this at the beginning, but I'm not sure this pointedly. So what do you believe will be the long-term load reduction after COVID-19?
That's a great question. So we're seeing right now, Italy went down like 19 to 20%. And we're seeing anywhere between a 10 and 20% decline in load during the lock-in, during the period of sheltering in place. I actually don't think there's going to be a huge change. I think we're all going to learn that, hey, we can work remotely and maybe we don't need to do as many meetings, but I'd be really shocked if we had much more than a 2 or 3% secular downshift. Now, it might take a while to get there. Restarting the economy is going to take a while, but I don't think it's going to be enormous. I could be proven wrong. I've been working remotely for 15 years, so I mean, it certainly can be done, but I don't think U.S. business is quite ready for that yet.
Okay, great. Well, so for other folks who want to ask questions, and Jeff, I don't know if you have any questions for Russell. I'll put you on the spot, but I'll keep monitoring the chat menu here.
Yeah, Russell, I don't know if you can hear me, but what's your sense of we're watching Harold and others go to Washington and try to find a solution, or at least some action on a solution to oil prices. And of course, we all would love to see fossil fuel prices competitive because it makes us more competitive. But what's your sense of an agreement with the Russians and the Saudis, or is it too much to hope for in this environment right now?
Yeah, all right, let's talk about the elephant in the room, right? So we have two meetings later this week. We have the OPEC Plus meeting and we have a G20 meeting. And there is lots of talk about a 10, 15 million barrel a day cut. I would not bet on that right now. So first of all, even if Russia, the US, Saudi Arabia, Canada, Norway, Brazil, Nigeria, everyone gets together and comes up with a 15 million barrel a day cut on paper, there are two things I'd want to say to that. First of all, most estimates I've seen say we're down 20 to 30 million barrels a day of demand. So that wouldn't even be enough. It might buy us some time, but it wouldn't be enough. Second of all, let's not forget that there's always cheating that goes on in OPEC. And if you think that there's not going to be cheating in some sort of grand coalition where I promise to cut 1 million barrels, but maybe I only do 700,000, you're fooling yourself. There will be cheating. I don't see it happening. I don't see the president, up until a couple of days ago, had the mentality, sort of an outdated mentality, that low oil prices, low gas prices, everyone's likes because you get to fill up your gas tank for $1.05 or whatever. Well, I guess we're not quite there yet. $1.40, $1.50 here in Texas, $1.60. But of course, no one's driving right now. And, the Texas oil industry is just getting battered. Whiting's already filed for bankruptcy. Others, I'm sure, are not too far away. The only thing that I could see happening that would bring together some sort of deal is if Mike Pompeo or whoever our lead negotiator is, and it doesn't give me much confidence that I don't know who the U.S. negotiator is going into this G20 and OPEC Plus meetings, says, look, guys, we're going to close down the Gulf of Mexico for virus protection reasons. The offshore platforms are not safe. We're going to close that down. We're not going to set a precedent of the United States joining OPEC and making cuts, but that's 2 million barrels a day. That's our part. You need to do the same. Maybe we get some sort of grand deal. I just think we're still weeks away from any real deal being hammered down. I think the oil industry, it's got to learn to live with $20 to $25 oil for a little while. And there is a real significant chance that we're going to have physical limitations placed on storage in the United States and globally, and that will force a shutdown of wells. The other thing that people need to keep in mind when you're talking about, is there going to be some sort of grand deal? Saudi Arabia, between about March 20th and just even a couple days ago, filled up somewhere between 5 and 15 VLCCs, very large crude carriers, full of crude oil that they are currently sailing towards the United States, to the Gulf Coast. And as someone put it to me today, this is like reminiscent of the way the British Navy used to park their warships right outside, the palace where the cannons pointed right toward it. We're not going to fire on you, but we're going to remind you that we could if we needed to. I mean, that's what this is the equivalent of. I mean, imagine 2 VLCCs of crude oil arriving in a couple weeks in the Houston Ship Channel, much less 10. It would absolutely clobber physical prices, which are already low. Saudi Arabia has sent a very clear warning shot that they're not messing around. They're not in any mood to really negotiate a real reduction. Russia's more than happy to see the shale industry wiped out in the United States. I would not be surprised if there's some sort of paper agreement, but I don't put much stock that anything really holds up for any length of time. And as we've seen last week, beware the announcements, right? There was the announcement that there's going to be a deal, and then 6 hours later, there was no deal. So be very, whatever comes out first, don't trade around it, or don't make any long-term trades on it. I think this is just the first salvo. We've got a lot of negotiations left. I don't see a deal happening. I don't know, maybe at the end of April, maybe late April, early May, we'll have some sort of deal. And that will be driven by the fact that, most of the large storage facilities in the world will be full by then. South Africa's already full. Cushing is filling quickly. Gulf Coast is going to fill. Egypt, the Sumed will fill. Asia's filling. I mean, the only thing we could do is just buy massive amounts of cheap oil for the SPR, but there's some limitations there. You can only put, I think it's like 1 million barrels a day into the SPR, and the SPR is not designed just to take the kind of light oil that the Permian Basin's producing. So
right.
It's going to be ugly. It's going to be ugly is my sense. So you were saying, you kind of wanted a little bit higher prices. Maybe from an electric production point of view, the question is, as the Permian shuts down, what does that do to gas generation? And what does that do to electricity prices? So, for now, last time I checked, the summer electricity prices were down because of the demand destruction. I haven't looked recently, so there's not a lot of great news for people who want high energy prices right now.
Yeah, we have I think that secondary gas production, what the impact on that is and what that means for the cost of gas is one concern, but we have colleagues here from Oklahoma, and clearly a fiscally sound Texas and a fiscally sound Oklahoma is pretty critical to our industry as well from state government perspective. So we're watching carefully. Thank you.
Yeah. Well, I would be a little worried about Texas's fiscal strength the next year or two. It's not looking so hot, but this is what we've got a big rainy day fund. It certainly feels like it's raining right now. We'll see if the legislature agrees with me.
I've got another question that came in from Davi Wilson, so I'll go ahead and read it. I think I heard you on 1A a few months ago, and a big part of the conversation focused on how we should be balancing, quote, the greater good of more renewables with the individual private property rights and desires of project neighbors.
Right.
Who might oppose these projects.
Yes.
With renewable energy projects getting harder and harder to permit, where do you think this goes? Gas has been seeing its authority to drill decrease, i.e. Colorado's new local control laws. What's your crystal ball for the future of siting and permitting for renewables?
Good question. Well, certainly an economic recession maybe will make some more landowners interested in leasing out some of their land for wind and solar. Look, my crystal ball, I won't even crystal ball it. I spent a lot of time writing about transmission. If we build transmission, it'll be easier, I think, to build the renewable generation. So the question is, how do you build transmission? That was a huge part of the story and Superpower. And a big problem with transmission is that people don't want to see large lines crisscrossing their view sheds. I was really struck by, I'll tell a quick story. There is a woman on Facebook, she exists off Facebook as well, but she's very active on Facebook, named Karen Newman. And anyone who's tried to build transmission in this country probably knows who she is. She's a very strong anti-transmission activist, and a lot of the different regional groups kind of talk to her and trade information, et cetera, et cetera. Not long after the Sue Green Renewable Rail Project sort of came out of stealth mode and started talking about what they were doing and their underground project, she wrote about it on Facebook or on her blog. I can't remember which one. And she said something that to me was kind of striking. She said, look, for many years, we've been accused of being NIMBYs. We don't want to build this. We don't want to build this. We don't want to build this. She said, but that's not really true. We just didn't want to build it above ground. A below ground running alongside a utility corridor or alongside a railroad. She said, fine. She was fine with that. So maybe there's something to be learned from Karen Newman. Invest or find a way to run transmission through existing utility corridors, through existing transportation corridors, find a way to do it underground as much as possible. You know, Siemens and ABB and others say that some of the underground technology is significantly cheaper than it used to be, and probably a lot easier to, well, definitely a lot easier to permit, and some of the added cost of undergrounding would be partially defrayed because you don't, you know, you might have more certainty in your project. So think about undergrounding transmission. Obviously, you can't underground a wind turbine. So, you know, then it's just a matter of trying to, as creatively as possible, place wind turbines in a way that makes them compatible with center point irrigation, makes them compatible with the neighborhood, the communities, and also, frankly, you know, if I were in your shoes, I would be drilling down very hard as to where some of the money is coming from that is organizing and supporting this grassroots opposition. I think most of the grassroots opposition is real, in that it's what real people really feel, but I think it's getting a big drive and support from some other energy interest, and maybe pointing that out, that that this is, you know, it's not really a fair fight when one side's out in the open, the other side's hiding behind dark money, and who's really behind this dark money. I think that's what I would do. I would pull out who's funding and supporting some of these grassroots groups, and I would do everything I can to put transmission out of sight and through existing corridors, through existing utility corridors.
One of a developer friend of mine told me that this past year they've had more issues with people wanting wind turbines on their ranches and property than not wanting them. Mm-hmm. And I thought that was an interesting observation because, of course, this, you know, our rents in these communities are literally the lifeblood for keeping a ranch and their family for another generation or so.
That's been the case for a long time, and I think it will continue to be the case. You know?
Yeah, we had another question come in on, well, I'll just go ahead and read it. Do you think the politics of climate change are shifting? Are the increasingly aggressive business and investment positions on climate, i.e. BlackRock, having an impact on policymakers?
Good question, in that it's a question I've been asking myself also. I'm not sure I've figured out an answer. There is no question that, let's say, in the 6 months before the virus took over our entire national discussion, that there had been a shift toward viewing climate change as something that was real and less of a political ping pong to be batted back and forth, and more to be looked at or viewed seriously. I mean, even Kevin McCarthy, if I remember correctly, it feels like this happened 2 years ago, but it probably only happened 3 weeks ago, came out and said, you know, the Republicans need a position on this, and they, you know, they need to have a platform on climate change. I'm not going to say what I think is going to happen because I'm not that smart, but let me tell you what I hope is going to happen coming out of this pandemic. I hope that there's more recognition of the risks involved in climate change and more people taking seriously this risk now that we've seen what happens when we don't pay attention to the risk of a pandemic. I hope that we come out of this with more of a desire to listen to scientists who are telling us that climate change is real. And perhaps we come out of this also with a desire to build, to build some infrastructure to put people back to work, all of which I think play in favor of climate change and climate change related projects. So all of that said, I think we will be on a 6 to 12 month breather on talking about climate change. That will probably change this time, or maybe not even this time next year, if there's a change of administration. If there's not a change of administration in the United States, I don't see a huge political shift. But I do see that the conversation, frankly, being led a lot by investors and corporate America, that climate change is real and we need to pay attention to it, I don't think is going back. I think that the camel's nose is in the door, and we're not closing the door on that one anytime soon.
Great. I had another question that came in that said, do you want to write that story about the opposition?
I tried to a couple of times, and I ran into, what was it? I actually started off writing the story about the Entergy, if you remember, funding all of those actors to go to the New Orleans meetings and say how much they favored a new natural gas plant, if I remember that was correctly.
Yeah,
so I was going to work on that story, and I had to put it to the side for PG&E, which took me about a year of reporting. And I will say that the other time that I tried to write about that, it was a dark money group that was, I believe it was Arkansas. It was appearing and arguing before the Arkansas PSC against Cleanline. And you absolutely could not figure out who they were. They would not tell me who their funders were. And I thought to myself, somebody really needs to make a very strong case that we have this structure of public service commissions and public utility commissions where all the sides are supposed to come together and present their case. And then the public service commission is supposed to figure out what's in the general interest, the public interest. And how can that be? How can we have a dark money funded group that's participating in this, and for the Public Service Commission or the Public Utility Commissioners not to call them out? I mean, my dream is for the chairman of the Arkansas Public Service Commission, when this was going on, to sort of say, look, if you will not tell me who's backing you, who you're representing, what your perspective is, what your financial interest in this, go home. I don't want you here before this because you're not being a good faith actor. So that's my dream. It didn't happen, but a boy can dream.
What do you think some of the offensive strategies our industry should be taking with COVID-19?
Oh, with COVID-19. I don't think there's much for COVID-19, maybe other than to point out that it's a lot easier to continue running a wind turbine and a solar farm while social distancing and not putting your workforce at risk. I mean, solar farms you can completely space out. There's only like one person you need there anyway, and not even. And wind turbines, I mean, you send one or two people up the turbine. But that's a little bit of a tangent. I think the bigger question is, coming out of this, if I'm right that we're going to be in a pretty strong recession that's not going to go anytime soon, I think the counter position is to charge out of that and say, in a zero interest environment, we need to be building things. We need to be borrowing money now to build things, and the best thing, and that plays to renewable energy, whether it's transmission or whether it's renewable energy projects, which, let's face it, are capital intensive up front, but then have low operating costs. Now is the time to build these assets. And I think you can make that argument You can make the argument for jobs. You can make the argument for putting people back to work, et cetera, et cetera. Make the argument that the existing transmission system in the United States is getting older. If you look at PG&E, needs a lot of upgrades. I mean, the problem with PG&E, there are a number of problems, but one of the problems was that they had a pretty much 100-year-old transmission system, and they had no idea when they had last replaced the hardware on their towers. So there's a lot of work that can be done. There's a lot of work. There's a lot of people that can be hired. You know, last time I checked, PG&E desperately needed people to trim trees and to deal with dead trees. There's work to be done here. Put people to work. Do I sound like a Green New Dealer? I feel like I'm starting to talk like a Green New Dealer, but I think maybe the economy is heading in that direction, or the needs of the economy are certainly heading in that direction.
Sure, absolutely. Well, we have about 7 minutes left. So Jeff, do you want to try and open this up and see what happens?
I just did. Let's see, we'll give it a run. So unless people have muted themselves, then they should be able to speak. If you have muted yourself.
Oh, no, if nobody else will, I'll jump in. Russell, this is Doug.
Hey, Doug.
Go ahead. Was somebody else saying something?
No, you're saying something. I said hello to you.
Oh, okay. Very good. Very good. So I think you were going to be starting a column on the business of climate change. Maybe you already have. Can you talk a little bit about how your beat is evolving? And also just curious of your views on the journalism industry and how journalism in energy is changing and what that means for the industry.
Yeah. So unfortunately, well, I had been about to start a new beat at the Journal that was looking at climate and business. By mutual agreement, we're putting that on the back burner right now. We just don't, for the next few months, that's not the story that everyone's focused on. We're going to head in a little bit of different direction and come back to that. So it's a sort of a, every time I'm about to really get going on this climate business beat, something happens. PG&E happens, viruses happen. So we're putting that on the back burner. I wrote a few stories, but nothing. I was just really beginning to dig my teeth into it. You know, on the other, you know, it's a little bit of a plea. There's no question that the news industry, and very specifically the newspaper industry, is in real trouble here. Not the Wall Street Journal, not the national papers, but the local papers are in significant trouble. And they were already in bad shape, and there's really going to be a dearth of regional and local news that is going to be able to survive after this. So the fewer people who are covering the stories, the more stories will go unnoticed. I mean, there are a number of stories, you know, the debacle in South Carolina trying to build the VC Summer nuclear power plant. The newspaper in Columbia, South Carolina, covered that beautifully. I followed their coverage. I was aware of what was going on, and sometimes I would jump in. It worries me as an energy reporter how I am going to do my job when some of the local papers are not going to be there or not going to have people covering these stories to sort of alert me that, hey, something's going on here, I should pay attention to it.
Russell, I was going to, if you are, when you're ready to write that story about our dark money opposition, they have gotten a lot sloppier recently. So we
have it.
Yeah, so we actually have, they're getting less talented at hiding their footprints. So when you're ready for that story, we would love to help you.
Okay, that sounds great. I might take you up on that. I might be taking a little bit of a hiatus from energy reporting to be more virus reporting over the next few months, but good stories never go away. You know, dogs are some of my biggest fans. They've bought a lot of my books, so I really appreciate that last comment from that dog. I do, seriously.
Russell, for fear of getting too wonky,
Yeah.
most recently FERC put out some new incentives for transmission.
I saw that. I saw
Yeah.
that. I haven't followed it as closely as I should have.
So I was just curious. It's a couple hundred basis points for utilities and private developers, independent transmission companies.
I've been saying we need something like that for a while. I'm curious whether it's going to make a difference. Did they also finally put some teeth into their competitive, the competition to make sure that that there's competition on some of these projects? Because that's been another problem, is that, you know, it's very hard for some of the competitive transmission builders to be able to go out there and underbid and provide, you know, economics for some of these projects. But no, I think that is something that needed to have happened. So I applaud Chairman Chatterjee for doing that, and we'll see if it makes a difference now.
Yeah.
And that's not wonky at all. Look, we're among friends. You know, if we can't talk about basis points and transmission now, when are we going to? We certainly can't talk about it with our spouses. They grow tired of that. And not with our kids, God forbid.
Well, I know we all try and tell our kids about how cool the electric grid is. So.
Yeah, Spencer, you walk into when your kids are playing Fortnite and make the same announcements that I do. Like, you know, you wouldn't be able to do that if it weren't for the ERCOT power grid.
That's right. Yeah, well played.
Yeah, the eye rolls. The eye rolls I get.
Well, we are right about at the top of our time, so maybe I'll turn it over to Jeff. Jeff, do you have any concluding thoughts, or maybe we turn it back over to Russell to make a few closing statements? And
Russell, just on behalf of all of our members, and we just really appreciate you taking time to share some thoughts with us, and we enjoy your books, and we've I can say for myself, I've learned a lot that prepared me for this job by reading your work. So thank you for what you write and what you do.
No, thank you. Look, I'm going to continue to be interested in renewables. I'm particularly interested in this question of whether renewables come out of this recession, this pandemic, strong. And so if you guys are seeing that, you know, let me know. I'll be happy to write that story. And obviously, if it's the opposite, I'll write that as well. No, look, I appreciate you guys inviting me, but I'm only as good as people talking to me and sharing stories with me. So, you know, you guys, the people here on this call are all potential sources, people with good, interesting ideas. So I encourage you to drop me an email or pick up the phone sometime and let me know something's going on.
Great. Well, thanks for speaking with us today. This is our first Zoom webinar, and Russell, thanks so much for your time and effort, and we'll hopefully do some more of these in the future.
Thank you very much. Have a good day.
All right.
Thank you.
Bye-bye.
Thanks, everybody. Be safe.
Thanks.